How can I claim a stock loss tax write-off on my taxes?
Hello and welcome. Today, we're going to delve into the nitty-gritty of claiming a stock loss tax write-off on your taxes. If you've experienced a capital loss in your investments, don't fret, there's a silver lining. You can use these losses to offset your taxable income.
What is a stock loss tax write-off?
A stock loss tax write-off, or a capital loss deduction, is a provision by the Internal Revenue Service, IRS, that allows investors to use their financial losses on investments to reduce their taxable income. This can help you save a significant amount of money on your taxes, especially if you've had a tough year in the market.
When can you claim a stock loss tax write-off?
You can claim a stock loss tax write-off in any year that you sell your stocks for less than what you purchased them for. The key is you must realize the loss by actually selling the stocks. This is known as a capital loss.
How to claim a stock loss tax write-off?
To claim a stock loss tax write-off, you'll need to report your capital gains and losses on Schedule D of your Form 1040 tax return. Follow these steps. 1. Calculate your capital loss. Determine the amount you paid for the stock, your cost basis, and subtract the sale price. If the result is a negative number, that's your capital loss. 2. Report the loss on Schedule D. Use Schedule D, Form 1040, to summarize your capital gains and losses and to calculate the amount of loss you can deduct. 3. Transfer the amount to Form 1040. Once you've completed Schedule D, you'll transfer the loss amount to your Form 1040, which will then reduce your taxable income. Remember, you can deduct up to $3,000 of capital losses a year from your ordinary income. If your losses exceed this limit, you can carry them forward to future years.
What documentation do you need?
You'll need the following documentation. Purchase records. You need to know what you paid for the stock, including commissions. Sales records. You need to know what you sold the stock for, less any selling costs. Statements or receipts. These can provide evidence of the transactions. Keep these records organized and accessible in case the IRS asks for them. And that's a wrap on how to claim a stock loss tax write-off on your taxes. Remember, capital losses can be a strategic tool in your tax planning, helping offset gains or even ordinary income. Always keep proper records and consult with a tax professional if you're uncertain. We hope you found this video helpful. Happy investing and thoughtful tax planning!